Silver hit $50 back in April 2011. The ratio was 31 to 1. And just, recent times we've hovered between, the low 90s, the mid 80s, and we even spiked over 100 a couple of times, which is pretty shocking, because the mining sector, only mines 7 ounces for every 1 ounce of gold being mined. So, that in theory, that's where the financial market should price the metal. Obviously it's not happening, but even, if we get down to 30 again, or even, 10 or 15, you come up with the number, you do your math and divide it over gold. And then, that tells you triple digit silver is coming. And I coined that phrase 10 years ago. And I think I'm going to be right. To that point, David, when I put First Winchester together in 2002, silver was $5.
That's right.
And I called for $50, and people looked at me like I was crazy. Well, it took 10 years to get there, but silver didn't get to $50. I didn't predict silver was going to go from 50 to 12 over the next 5 years, which it did. But I coined the phrase triple digit silver, not because I'm talking my own book. I put a silver company together for a reason, because I'm a bull on silver. It is a very strategic and very much required metal. There's no other metal like it. There's no substitute for silver. So I personally still am a big believer of triple digit silver. No, not different at all. When I put the company together, solar panels, electric cars, a lot of the gadgets, nuclear power plants, things like that, which all require vast amounts of silver, weren't really on the radar. I was looking at cell phones. It wasn't that much earlier that I bought my first cell phone. I'm seeing everyone all of a sudden getting cell phones and computers, and I said, "Geez, what's going on here?" And I came from a copper company, so my mentality was very much supply demand related. And I think that's just simply what it is. We're in 5-year deficits for silver currently. There's no light at the end of the tunnel. There's no reason why all of a sudden the mining sector is going to start supplying more silver to the market. We need higher prices in order to supply more. The mining sector is not going to make the investments to produce more metal, because we've got a lot of low grade ore out there that just requires tons of investment to get out of the ground and get produced to supply industry. And we're not there. That's going to take 5 to 10 years to actually start to increase significantly the amount of silver that the silver industry is currently producing. So you're going to get this huge run up in prices just to incentivize the mining industry to make the investments necessary to meet that supply deficit. I was in a refinery in Japan just back in April, and this refinery is running at 50% capacity. And they have a team of people that scour the planet looking for waste, computer waste, generally speaking, mostly computer waste, and they can't find enough of it. The recycling is a very energy intense business. You need hydro or you need nuclear. You're not going to be burning fossil fuels to recycle metal. You're just going to blow yourself up. You can't do it. It's just too expensive. So your energy costs are key. And the technology that particular refinery is using is key, because it's got to be able to take out a variety of different metals in these complex components that, we built, to take the gold and silver out of a cell phone is not exactly an easy task. It takes a lot of energy, a lot of time or work to get it out of there, and to do it economically is tough. And if you go back to the previous slide, that one, no, there was actually an earlier one in this presentation. Oh, here it is. So the gray bar is recycling. And you see there's a recycling number has pretty much been in the 150 million ounce range over this 10-year period. It hasn't really fluctuated very much. And that's despite price volatility. Right. So, that tells you that there's not a whole bunch of recycling going on just because it's too expensive. There's no recyclers to any great degree in North America. Most of this computer waste or recycled metal gets produced in Asia, where they're less constrained by energy use. Oh, for sure. These deficits have been now 5 years in, and actually, if you go back further, which we don't have on the slide, there were deficits previously as well.
Yeah.
But the market doesn't pick up on this stuff. As I said, most people don't understand silver. I think silver is probably the most misunderstood metal on the planet. It's looked at by some as a currency, which I don't believe. I look at it as a strategic metal, and then I think investors are waking up to that. But it's always been looked at as a poor man's gold. I even heard someone the other day said, "Oh, because gold's $3,300, people are now buying silver because it just makes more sense." Well, that's not the reason to buy silver. To my mind, anyways. I own gold because it's a hedge against currencies. I buy silver as a long-term investment because I think prices are going to be much higher due to the supply demand fundamentals. And it's not in their best interest to see the silver prices go up. But now with these deficits, and you ask me what's going to change that, with the deficits, I'm a firm believer in markets. I started in the banking sector back in the 80s, and I think markets do go through these periods of we'll call it incorrectness or whatever you want to call it, but they do come back to reality and they do correct themselves. And I think the physical side of things are causing issues, and some of the things I'm hearing, what's going on in the physical markets. We see the transfers, we see inventories dropping around the world. ETFs are also now accumulating more physical. So there's a huge draw on above ground supplies, and that's, I think, going to ultimately affect the paper market. I don't see how it cannot affect the paper market. So I think people are also waking up to that fact, and people are now wanting to take physical delivery, not just of silver, but of course we're seeing it in the gold market as well. So yeah, I think it's all good, and unwinding old markets the way they used to run into getting into a new, more physically driven market. It take most silver miners, silver is a byproduct. So there are copper mines, there are gold mines, there are zinc mines. Silver is just noise on their financial. They don't even tell you, report to you how much silver they produce because it's such a small item as a revenue item for them. It adds a little bit to their profit, but they're not going to increase investment at the mill or the mine just to get a little bit more silver out of the mine because all the revenue is coming out of their core products, which are generally speaking copper and zinc and gold. Well, there'd be two things, and generally speaking, it's permitting. So you would have to reduce the permitting cycle. I'm the chairman of a company called First Mining Gold, and we have a very large gold project in Northern Ontario, which we purchased back in 2015. So 10 years later, we spent $100 million on permitting. And there's a light at the end of the tunnel, thank goodness. But all permits we're expecting will be in place maybe within 1 to 2 years, and then groundbreaking can start. Then you're looking at building a facility, which will take you, 3 to 5 years to build it. So from discovery to production, because discovery was 2010. So, that would be 20 years, which is pretty normal for a mine. And that's all bureaucratic. The governments can reduce that if they wanted to. And a big copper mine, big silver mine, a zinc mine, whatever the case may be, it doesn't have to be gold, but they need to allow the mining sector to go in because this is large dollars. So boards of directors have to allocate this capital, and investors around the world, these small public companies have to go continually back to market to find new investors. And when you're looking at 20-year timeframes to get from drill bit to first pour, that's a long time.